It is January of 2023. Happy New Year, everybody. Welcome back to the channel. And that means it's time for a monthly market update. And because we're reviewing the stats from December 2022, it's going to be a little bit of a year in review as well. So I'll be giving a general overview of the Fraser Valley Real Estate Board, as well as a specific focus on Surrey, Langley, and White Rock. And for those of you who aren't familiar, the Fraser Valley Real Estate Board is essentially everything east of the Fraser River, starting from North Delta all the way out to Abbotsford. So let's not waste any time and we'll dive right into it. So to get us started here, I'm going to give you a quick overview of the written portion from the Fraser Valley Real Estate Board looking at the 22 market, stating that highs, lows, and a return to balance. So in a year that saw prices peak early on, feeding off the momentum of record-breaking sales in 2021, the Fraser Valley real estate market came back to earth by the close of 2022. Largely due to interest rates, of course, as everybody knows this. Just touching on some of the numbers here. December 2022 was down 14.7% from the previous month and down 60.4% compared to the same month last year, making the December sales the lowest recorded in the last 10 years. And this is a trend that you saw for the majority of the year, that sales were down overall, but let's continue on. The board received 803 new listings in December, which was a decrease of almost 53% compared to November and 37.2% fewer than December of last year. So total active listings in December stood at around 3,900. I'll show you in a minute that the average number we should actually be seeing for more of a balanced or normal market is closer to 6,000 in the Fraser Valley, down 26.4% compared to November, but nearly double compared to December of 2021. So we were at extremely low levels of inventory last December, still at quite low levels, but definitely nowhere near what we were there. But that is part of the reason why we saw some extreme spikes in prices during January and February of this past year. So the year closed out with a total of 15,273 sales, just over half of 2021's record-setting 27,692. So take that into consideration, almost half of what it was the year before. Now, again, that was a record-setting year. We wouldn't expect to be anywhere near that on a regular basis, but to be cut in half immediately, obviously you can see part of the reason why we've seen such substantial decreases in price in certain markets and property types. And the ninth lowest annual tally of the past decades, new listings were down about 9% at 32,000 compared to 2021. So with sales to active listings ratio at 18%, the overall market closed out the year in a balance. So for your information, if you're not familiar, a balanced market would be between 14 and 20%. Some people say 12 and 20%, but either way, in that range is typically a balanced market. So below that would be a buyer's market, and above that would be a seller's market. Just skipping ahead a little bit here, home prices peaked in March of this year. It was actually more like February, but they're using the benchmark prices, which I'll be using in my video today. So just keep in mind that these are a little bit delayed, typically about a month or so. So you won't actually see things turning around immediately. You should actually be talking to professionals like myself and getting updates at the ground level, because stats are always a little bit delayed, especially benchmark prices, as you'll see in a minute here. So with benchmark price for a detached house hitting a record of almost 1.8 million before closing out the year, significantly lower at closer to 1.4, the composite benchmark price of all property types, so the combination of detached, attached, so townhomes and condos, finished the year under $1 million at almost $956,000. And with that, let's take a look at the Fraser Valley itself. So looking again at the composite price that we've seen, as I mentioned, $955,700. If we look back at the year previously, we're down about almost 9% from over $1 million. But what I want you to keep in mind here is that over the next 2 months, if prices continue to slightly slide down, which I do predict they will, if not just kind of maintain where they are, again, just very slightly, we have these massive upticks over the following 3 months. So it's going to make the numbers look more exaggerated than they actually are. So keep that in mind, because there's going to be a lot of news headlines that are going to be throwing up these massive numbers for massive decreases in price and sales and everything else. But you have to consider that this was during these peak 3 months of the market, record-breaking sales and prices as well. So moving on, we already kind of touched on it, but if we look at new listings in comparison to the previous year, so December, only 679, even in the previous year, which had significantly less listings, half of what we had active at least. So if we look at this past December in comparison to the one previous, almost half the number of new listings, although when we look at active listings, it was pretty much double, as we saw a record low level of listings in December of 2021 was 1,700 in comparison to 3,500. As I said, if we kind of take a look here, this is about the average around 6,000. That's more of a balanced market. Of course, we always see kind of a peak number of listings as we head into May and June of most years, building up from January and then slightly declining all the way into December every year until it builds up again from January. So otherwise though, we want to see more of a higher level of inventory. Otherwise, it's still constricting the supply and demand, and it's going to be hard to see any more major declines in price, in my opinion. Although, as I mentioned, I do think we will still have some slight decreases. Now, looking at the sales to active listings ratio, again, looking back at the previous year, almost 100%, just absolutely ridiculous in comparison to this December, which was much more reasonable, a balanced market by definition at 18.6%, and almost actually trending up to the higher end towards a seller's market. But if you're out there as a buyer right now, you know that even though the stats lead you to believe it's more of a balanced market, it is definitely feels at least like a buyer's market, even though by definition we are in a balanced market. So looking at the average days on market, we've trended up over the last several months. We are now at a median of 27 days on market. So properties aren't just flying off the shelves right now, but what I will mention coming from ground level experience is that the good product is still selling quick. There is a lot of what I would consider junk or not wow factor properties on the market, and those aren't moving unless priced extremely effectively. So you have to either win on the wow factor, being the nicest listing on the market in your area and your property type, or you're gonna have to win on price. It's one or the other, because if there's 10 properties listed and they're all similar to yours, let's say it's a 2-bed condo in Willoughby in Langley, and you don't have the best price and you aren't the nicest unit, it's kind of cookie cutter compared to the other ones, how's that gonna draw more people into your property? Now, moving on, let's take a look at prices in Surrey. So for the detached market, where did the year end? Looking at the prices for detached properties in the 4 areas within Surrey, we can see for the MLS benchmark HPI prices, South Surrey leads the way at just over 1.83 million. Surrey, or the more central Surrey area surrounding Fleetwood, is at 1.417 million, and Cloverdale at just under 1.37, with North Surrey bringing up the rear at 1.361. As we can see, South Surrey has definitely held the best in comparison to the other areas at only a 3% decline. Now, because these are benchmark prices, I would say most of these haven't really been truly reflected yet. They probably will in the next couple of months, but definitely a greater decline in the other markets compared to the South Surrey area. Now, moving on, looking at the townhome market, once again, we see a similar trend. However, South Surrey White Rock at 904,000, ending the year at just a 2% decrease compared to last year. The central Surrey area at almost a 4% decline, ending the year just around 790,000. Cloverdale, very similar. However, Cloverdale did drop by a greater number at almost 6%. And then North Surrey actually had the lowest decline. North Surrey also probably has the least number of townhomes, if my mind serves me correctly, especially in the Whalley area. But we can see here that it ended the year at 713,000. There are a lot more older units in this area, which probably play a bit of a role in that. But anyways, I digress. Moving on, let's take a look at the condo market. So again, South Surrey leading the way at 571,000, actually an increase from the previous year at 0.1%. Central Surrey in the second position, just edging out Cloverdale, ending the year at 521,000, a 2.1% increase. Cloverdale getting hammered here, and Cloverdale has a large number of condos in the area, as well as North Surrey. So seeing an 11% decline, and we actually see a lot of that rundown in prices towards the final few months of the year. And then North Surrey seeing 465,000. And I would say Cloverdale and North Surrey probably have the greatest levels of inventory for condos, and that may have played a role because, as we know, supply and demand, so inventory versus number of buyers, the more inventory there is, the less number of buyers. That's going to force prices downwards. Moving on, let's take a quick look at the Langley market. So as we can see here, detached homes in Langley ended the year just under $1.5 million, almost an 11% decrease. Langley got hit pretty hard last year. Townhomes at 815,000, actually up 3.2%, so performed pretty well. And apartments up around 1% at 568,000. So there you go. There is your quick stats for the Surrey and Langley markets. So just as a reminder, the numbers that I was using in the video today are benchmark prices and comparing the year over year average. So December of 2022 compared to December of 2021, two extremely different markets, one of the hottest real estate markets in comparison to one of the coldest in a long time. Additionally, as I already mentioned a couple of times, benchmark prices are a little bit delayed. So as we move into the following months, you will see more of a decline or detachment from what the prices appear to be in this video and where they are then. So where are we headed? What does this mean for you, and what should you be doing based on your unique situation? Well, we've got our next Bank of Canada interest rate announcement on January 25th, and the majority of people do believe that we're going to see some sort of an increase, probably a quarter point or half a point. And because of this, I would have to say that we'll definitely see some sort of trickle down effect just based off of buying power. Now, I personally believe that we're on the other side of the greatest declines, as we saw some pretty substantial decreases in price in a relatively short period of time. Obviously, depending on the property type and area, the general characteristics for this were detached homes fell by the most, townhomes fell by the second most, condos fell by the third most, and then in terms of area, the closer to Vancouver you were, the less decline there was, and the further out towards Chilliwack you got, the greater the decline was. Now, this varies a little bit based on property type and area, but you can use this as a bit of a rule of thumb. So based on this, if you are a first-time buyer or an upsizer, it is a great time because the gap between your property and the one above you has continued to shrink and will probably continue to shrink a little bit more. So if you're able to sell in the near future and get longer completion dates so that you're able to go out, let the market come down just a little bit more and have more options to choose from, I think this is your best bet right now. And for you first-time buyers out there, my suggestion would be to get your ducks in a row right now and to actually start your search, because I think the greatest opportunity is in the next 2 to 3 months, because after that, when we have our second interest rate announcement in March from the Bank of Canada, if we don't see any sort of an incline at that point in time, I think that's going to signal to a lot of people that the rates and the market have stabilized, and we're going to see a ton of people diving in. And a big reason for this is just anecdotally for myself and many of the agents I'm talking to, I've never had a larger pipeline of people that are looking to get into the market but are currently sitting on the sidelines to wait and see how things play out. And as I've said time and time again, you don't want to try and exactly time the bottom of the market. You would rather get in just slightly before everybody else tries to dive in and there's FOMO and you have a ton of competition. But that's all going to depend on your unique situation, because buying real estate is more than just the price. So if that's something that you're interested in and you're thinking about making a move in 2023 and you'd like to discuss your unique situation, you can scroll down and book a call with me to discuss your options. If you got any value out of today's video, all I ask is that you hit that thumbs up button so the algorithm will push it out to more amazing people just like yourself who want to learn more about real estate. And if you enjoy videos just like this one, as well as other Canadian related real estate topics and community tours across the Lower Mainland, I suggest you consider subscribing to my channel. Lastly, if you'd like to review the stats more in depth, I will leave a link down in the description that has a better overview for all the specific submarkets and property types in the Fraser Valley. And before you go, head over to my channel to check out another video. Thanks so much for watching, and we'll see you in the next one.